Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Thursday, the 20th of February, 2025. And we're just getting on to about 5:55 p.m. Central Time. What a crazy day. You know, it was all due to Walmart. If you shop at Walmart, I don't know what to say. I cover it in detail in the Spider ETF. You might want to go see it there. I'm not going to cover it here. Suffice to say, we're getting back a little bit of a bid tonight. For traders in the NASDAQ, it's still profitable trade as I look at it. If you were following me in my morning subscriber videos, not the morning flash video, the subscriber videos. Gold is still moving to the upside. I wanted to jump even more than this. I'm concerned that everything around gold was falling today, and gold really didn't do a heck of a lot. It held. I guess that's the good thing. Energy markets, are they going to break out to the upside is what a lot of chartists are looking at. I see the patterns that some are saying, but it hasn't done it yet. So I think you're forced to wait. There's two parts here, all right? What happens to energy if the U.S. and Russia buddy up as Trump is doing right now and a deal is actually struck? Won't more Russian oil come on the market? I wouldn't think that's initially bullish. We'll find out. If no deal is struck, it keeps that oil off the market and tightens everything up. That's another part to it. What would Europe buy if the sanctions on Russian oil are released? Is that good for our natural gas or bad? You got to start thinking those things through because they impact the gold market. In other words, energy's inflation, another way to look at it. The dollar today down. You know, I've been doing a special report. I did a special report for you on the dollar. You want to take a look at this, all right? It's unfolding right in front of you. As we take a look at the foreign currency market, still a mixed bag with one exception. Power in the end, because more and more of the bank governors there are saying it is time to raise rates, and the market's building that in already. Bonds and notes, well, today they didn't get fear bids, I'll tell you that. They were up a little, they're giving it back a little, but not a lot there. We'll cover that as we get to the financial market. Now, for tomorrow, we have news coming out. We've got the S&P Global Group, their U.S. preliminary February manufacturing and service sector PMIs will come out, and everybody's going to look at that at 8:45. We're going to get existing home sales for January. That's been hurting, as you know, the housing industry. Those numbers come out at 9 o'clock. But today, I'll just drop down here. Fannie Mae said that the mortgage numbers did drop again. So this year, we slipped down today to just under 7% for now 5 consecutive weeks. We got a tight band there. It's not collapsing, but it's not going up 5 weeks in a row. And I guess what? Today is the 20th of February. It is Inauguration Day, 30 days later. So the president is getting a winner on some things. Very important there. And last, University of Michigan, their final February consumer sentiment. That's going to come out tomorrow at 9 o'clock. So as we look at the markets, how are we doing in them becomes a question. We'll get to that in our financial ones. Are they ahead or behind for the first 30 days of Trump? All right. What we know is the metal market's on fire. The gold market's a winner for Trump. You're up now. If you closed here at $29.40, you're up $56 for the week, nearly 2%. So it's been a heck of a nice gain. You're still caught in the sideways action here. And by the way, you have that same type of action if you look at GLD on the ETFs. And so you are drifting here. The question is, can the market accelerate and make the run now to the 3,000 level or not? You still have the pattern of higher lows and higher highs at work. The market is over the 18-day average. And now that number is over this last break low. So it took time, but now you've got support under the market that isn't under the break low over there. So there's something in front of that. And the resistance gives you room to run if it wants to, if it gets any news tomorrow to run with, that the upper Bollinger Band's 29.97. And, you know, the newscasters will be all over it. The countdown, as you remember, they always do that to $3,000 an ounce. It's almost a kiss of death, so you got to be careful. I remember I would be on Fox with Liz all the time. And she'd have her hats and all. We'd all laugh about it, especially off screen before you all saw that. We've got higher lows, higher highs, and as you can see, the market sitting here fighting its battles over the 80 level right now. Bullish though, embedded reading. Until you lose that reading, I stay in the bull camp. And obviously I'm concerned with that low, but this chart is cleaner right now than the ETF, and yet the ETFs would have got the clients in, not in the futures. It's so strange. They flip around on you all the time. In the gold-silver ratio, you're still favoring the silver as long as you stay under the 18-day average of closes. And as you can see in the silver market, first thing is you've been correcting, but you're still in overbought territory. I define any reading overbought, either of the numbers, the K or the D, the red or the blue, over 70 is overbought. So it doesn't mean you can't go higher, but you're not doing it with my recommendation to do so. In the copper, you're still overbought. And I know they both held today, and that's impressive. You had an outside day up, in fact, in the copper. If you take out today's low tomorrow, be careful. You're probably then looking at the 18-day average and not the 18 price and the 18-day average coming together. Don't do that. And maybe this is an area where the market wants to make a stand. Platinum's been making a stand for 3 business days now, including tonight. You can see how you fell down. You challenged the 200-day average here, then again the next day, then today, and actually today's the 4th day where you're still in that range. So we'll see if it wants to extend down here, if the market's going to say enough. It's finding the support right through there. And in the dollar, I'm looking at this area's importance. I don't know if you'll get down to the 200-day. It's going to take more work. My first goal is right in front of you, and you can find out why I say that when you go over to our special report. Now, if you go to our website, the special report is there. Just go to iraepstein.com. You'll see in bright green on the top left the dollar report. In it, I cover for you the futures market and UUP. Then we're going to take a look at price counts, which is unique to the Linn and Associates, the seasonal charts. I use SeasonX, and the more research will cover 5 years, 10 years, 15. I might even go out as far as a 54-year because we've got all those different ones in there. And we look at the daily and the weekly charts to try to give you an idea of where I think both UUP was going or is going, and futures was going or is going. All right, so you can take a look at that. You can also move your cursor up to the top here. You'll see an icon that'll take you there, iraepstein.com. I'm going to catch up with you all with the weekend edition, ideally tomorrow, by the way. Want to get those out because there's so much happening now so fast because nobody can keep up with the Trumpster. I'm Ira. You have yourself a great evening.